Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, April 2nd. Few retailers have as good a perspective on discretionary spending than consumer electronics retailer Best Buy. Mindful of this, the stock market pays close attention to the company's earnings reports. Some reports from Best Buy are naturally better than others given its cyclical standing. The fiscal fourth quarter report released today by the company was not one of those reports. Still, it was better than expected and a source of relief somewhat for the market, which has been caught up in reports about the ailing consumer. Best Buy admittedly contributed to those reports with an acknowledgment in February that soft domestic traffic in January led it to believe its fourth quarter revenue would fall short of its planned targets. Revenues, as it turned out, rose 4% to $13.4 billion, yet comparable store sales slipped 0.2%. Net earnings for the period declined 3.4% to $737 million. However, the effects of share repurchases produced a 10% jump in diluted earnings per share to $1.71, which was 6 cents ahead of the first call consensus estimate. Adjusting for the extra week in the prior year period, diluted EPS was up 14%. For its fiscal year, Best Buy reported a 12% gain in diluted earnings per share to $3.12. The latter was above the company's forecasted range of $3.05 to $3.10, but that was due primarily to a lower than expected effective income tax rate. To few people's surprise, Best Buy said it felt it was prudent to plan for a soft consumer environment in the near term. The company added, though, that it thinks growth in the second half of the year will more than offset modest declines in the first half. The arrival of tax refund checks and tax rebate checks will undoubtedly help boost the company's second half results. Altogether, Best Buy is forecasting fiscal year 2009 revenues in the range of $43 billion to $44 billion and diluted earnings per share to be $3.25 to $3.40. The first call consensus estimate is $3.31. In other words, Best Buy continues to expect growth on both the top and bottom line. The fiscal year outlook speaks to a slowdown in consumer spending, but like the bigger picture, it does not imply there will be an outright decline in consumer spending at Best Buy. This important realization has helped prop up Best Buy stock today as well as the broader market. Things could certainly be better for Best Buy, and they will be in time. In the interim, the confidence in the company's financial condition and quality management team, coupled with a reasonable PE multiple of 13 times estimated earnings, are tying factors that support holding the stock. I'm Pat O'Hare for Briefing.com. Thanks for listening.